All right, so welcome back. Today we're going to dive into eCash and what is the future of this split from what was known as Bitcoin Cash. My name is Paul Barron. Welcome back to TechPath. Joining me today is Amaury Séchet, who is one of the lead developers for eCash, ABC. And great to have you on the show, Amaury.
Hey, nice to be here.
Excellent. Where do we find you today?
I'm located in France, in like the northern part, in the middle of the forest, nearby Chantilly. Maybe people who like horse racing are gonna know the place.
Very nice, very nice. Good deal. Let's talk a little bit, Amaury, about for our viewers is a little bit around the mission of eCash, what you guys are trying to do as a whole. Before we get into some of the detail of how the split occurred, what were the some of the things you guys were
hmm
trying to achieve, but give us kind of a rundown of where you guys are today.
Yeah, so really the mission of eCash is to be sound money, I'd say, but it's very broad, very vague, so I can delve a bit more into it. Um, Typically, there are two form of money that are used a lot. Obviously, like excluding crypto, which is new and exciting, and there is a lot of stuff going on there. But traditionally, there are two form of money. Like one of them is going to be what we call hard money. So this is going to be stuff like precious metal, for instance, gold or silver
Right.
or this kind of stuff. Um, it has very good monetary property in the sense that it's fungible, it's scarce, all of that. But it's not very convenient to use on a day-to-day basis, right? And so what happened is that people they start to use that, and as they trade, as the ecosystem grows, um, it becomes very inconvenient to use that, and so people switch to what we call fiat money. So fiat money is like what we have today, right? The euro, the dollar, the pound, like whatever currency you want to use. All of that are fiat money, and so those currency are way more convenient to use on a day-to-day basis, but they don't have the hard money property. Notably, you need to trust the central bank to, manage that in a good way, to not emit a ton of it, for instance. And even if the central bank is trustworthy, like experience show that as time goes on over time, there is always a point that comes where the central bank becomes untrustworthy, and this is the end of it. Um, so with eCash, we're trying to unify both. We're trying to make a currency or a form of money that have the property of hard money and also the property of fiat money. There's already the convenience of use of fiat money. That would be like really the most important thing.
I was looking at your roadmap, which kind of explains the main categories and improvements that you guys were looking to do. And obviously,
hmm
one was scaling the transaction throughput from about 100 transactions per second, going up to 5 million transactions per second. And then also improving the payment experience, instant and reliable baseline. How close are you currently in terms of your roadmap to reality with eCash?
Yeah. So the first one is, it's easily explained in one item like that, but it's actually like a ton of stuff, right? Like to get
Mm-hmm.
from 100 to several millions, it's not like one improvement. So we are doing
Right.
some over time, one after the other. Um, as long as we stay ahead of the curve on that front, I think we're good. The second one, though, I think is much more important. Like that's very binary.
Mm-hmm.
We are doing that with a technology called Avalanche, and so right now the state of affair is that we have the core consensus algorithm implemented, and the part that is missing is what we call peer discovery. So the different nodes that implement that protocol need to talk to each other and find each other on the network automatically to be able to run the algorithm between them. And that part is
Mm-hmm.
not completely finished, but it's in good way. So hopefully, um, it's difficult to give a specific date, but you know, being pessimistic, I think even by the end of the year, we should have something on the network.
Yeah. Explain to me the fork-free upgrades, because obviously we've seen, various forks and variations all the way from Ethereum to changes within what's happening over at Cardano. A lot of different projects have really started to kind of re-upgrade their own internal protocols to try to adapt to the new functionality of what the blockchain is experiencing right now in terms of growth. And right now we're still in very early days, so we're going to see continued scalability issues probably for the next 5 years.
Yes.
With this kind of approach, without a fork option, explain how that is going to work for eCash in terms of scalability in the future.
So I think there is a bit of a misconception. Like, we can still do forks if we need to, right? But the fact that one of the cool stuff with Avalanche is that not all the nodes have to agree on all the parameters of the protocol for the system to work. And that means that we can release a new version of the node with different parameters. And initially, it's not going to have any effect, right? But as more people deploy the new version and use the new version, at some point, those nodes are going to be the majority using the new parameters. And at this point, the new parameters take effect. And that enables a path toward the upgrade that is way easier in the general case, as long as this is something that you can do in that manner.
On the EVM compatibility with Ethereum, have you explained the differences between what you're doing on the Avalanche chain versus what you guys are doing within the EVM compatibility, kind of the comparison of cross-chain, or how are you adapting to the various chains that are out there right now?
Yeah, absolutely. So eCash is a Bitcoin-style blockchain, right? And so those type of blockchain have certain property, but one of them is that they don't run Ethereum type smart contract. And the reality is now that the EVM, so the virtual machine that run Ethereum smart contract, has become de facto a standard to write smart contract, right? And so many other chains have started to adopt the EVM technology for their own chain. And doing that on the Bitcoin-style blockchain has always been a huge challenge. I think nobody has been able to do it so far. And the reason is they fundamentally work in a different way, right? So Bitcoin is UTXO based and Ethereum is account based. And those two words, they really don't mix. So if you want to mix the two, what you need to do is that you need to have like a word that is on the side that runs an EVM, and you have still your Bitcoin chain that exists, and then you need a way to move from one to the other. And this has been a subject of research in the Bitcoin space for many, many years now. And we know to move in one direction, meaning from the main chain to like a side chain or a drive chain or whatever. But the way back has always been a challenge. It's exceedingly difficult. And it's not a solved problem using exclusively Nakamoto consensus that Bitcoin does. Because we plan to deploy the Avalanche consensus algorithm in addition to Nakamoto consensus, we can do that reverse path much better than any other Bitcoin type chain can do. And what that allows us to do is create those other systems that work differently, that can interact with the main chain. And so the two of them that we're specifically looking at is one with an EVM, because the EVM is the de facto standard to write smart contract now. And another one is one with zero knowledge technology, so that it can be like completely private. But because it's on the side, it's not on the main chain, we keep auditability on the main chain.
When you look at the benefits of what you guys are trying to do with some of the other projects that are out there on the open blockchain, and kind of the evolution of what we've seen with many different projects moving this direction, really what is the main characteristic of what eCash is trying to do versus, say, some of the generalized modules out there that are essentially trying to kind of achieve the same result?
So there are a few things, right? Because well, as you mentioned, there are many other technology out there, so it's difficult to give like a comparison against the other, right? Like I would have to pick each one of them and tell you why it's different. But the general trend, like first, the account-based EVM type system are way more difficult to scale than the Bitcoin style system, which I always find very like on the technical basis, which I always find very funny, right? Because the Bitcoin people, they want to keep the block small and they don't really want to scale the transaction throughput, whereas the Ethereum people are working very, very hard to make that happen. So there is a cultural aspect within those community that intervene. But from a 100% technical perspective, Bitcoin is way easier to scale than Ethereum. So having a Bitcoin base allows us to scale much more easily. So that one is pretty important. But then by graphing on top of this Bitcoin style core, the capability to have other chains, so we call them subnet, but other, like network, and you can move your coin back and forth from those network, and those network can be completely different, like completely alien to how the main chain works, allows us to bring like whatever feature or whatever other system we want to have. We can, if there is sufficient demand, we can build a subnet for it.
I like that. Okay, so in general, size of the team right now, or in your group that is currently developing on the project?
Oh, it's a fairly small team. If you talk about like just developer, I think we're 5 or 6, something like that, plus a few contributors that are in. It's an open source project, right? So there are contributors that contribute like very often, and then there are people that come and go because they need a feature, they implement it, and then they move on to something else, right? But I'd say there is like 5, 6 people that are very core to the development of the project, plus people that come and go. And then we have a bit more people around that to like organize a bit the work, make sure that we do some promotion around it, talk to the exchange, do supports and all of that.
Yeah. Well, I think that's the challenge that a lot of projects have, is getting getting the word out, letting people know more about what it's trying to do in terms of its overall mission, kind of getting people really understanding.
That's one thing. Oh, sorry, apologies.
Some of the functionalities of it, some of the key functionalities of it, for sure. Has that been a case with you guys?
Well, something we've noted that I find like very interesting and very captivating is that in that space you have projects that don't really bring anything to the table, but have fantastic marketing. And like they do well, but they tend to not do well on the long term, right? But on the short term, they do very, very well. Like one example of that we've seen recently is Shiba, right? Like there is not much of anything in that project except like it's a cool meme, it's fun, like people like it for that, and they have like a fantastic way of communicating and marketing and getting themselves known. So those kind of projects, they do fantastically well on the short term, but not that well on the long term. And then you have projects that do very cool stuff, but that are very obscure, that don't know to communicate it very well. And so we have tried to do a bit of both. We want to take advantage of those new way that people try to communicate about their project, but actually have an actual project behind it.
Yeah. Amaury, when you look at the market as it is right now, and you see some of the changes or challenges, I should say, with some of the projects that are kind of rolling out, we've seen a little bit of slowdown in the Cardano ecosystem, mainly because of the challenge that they're going through right now, which is rolling out their new development of Alonzo, and many of these scalability assessments that have been done, and obviously Ethereum's in the middle of theirs right now, going to ETH 2.0. Do you feel like we're going to need another year before we start to see real mature projects really implementing? Because right now it's a very speculative asset class. Most everyone is investing on, mostly top movers in the market, or something that in most cases, like you just explained, maybe don't have core tokenomics and principles of what the project really could be in terms of functionality. It's more of a marketing engine than anything. Do you think we're a year away from that, or maybe a couple of years away from projects really implementing use case in real world scenarios?
Well, it's very interesting because there have been a breathing effect around that, where some use case grow and then become victim of their success, right? So
Yeah,
if you go back about 5 years, Bitcoin was used quite a bit for payment. Like it seems strange right now, but at the time it was accepted by Steam and by Microsoft and by
sure.
Dell, like the computer company, like many big retail stuff. Like, people are asking now, like when Walmart or when Amazon or when whatever. But like 5 years ago, it was happening. 5 years ago, it was actually happening. And then what happened is that the whole system became victim of its success, right? Like more and more people using it, and then it reached capacity, and then the fee becomes very high. Confirmation
Yeah,
time become unreliable, and voila! At the end of it, it's not that good for payment anymore, and people stop doing that. And there was a lot of that on Ethereum as well. Ethereum is still like very successful, obviously, but um, Ethereum has a lot of scalability issue now as well, and the fee are pretty, wild, and that have cornered the whole Ethereum ecosystem in a way that is a bit self-referential, right? Because now all the new stuff that come out on Ethereum are solving problems for people that are already in crypto.
right.
This is a discussion I had with Vitalik actually recently. Like if you look at all the DEXs, for instance, all the DeFi in general, right? That's a fantastic ecosystem where you can trade a bunch of token and do a bunch of financial products using crypto, right? So that is pretty good, but that does nothing for people that like. There is no reason to go into crypto for that, right? Like if you're already in
Right.
crypto and you want those financial services, then that's fantastic. But it doesn't solve the first step, and it seems that you cannot bring any more people because the system is running at capacity already.
Yeah.
So there have been a lot of real world use case, I think, more than people realize for those different systems, but quite often they have been victim of their own success. So, well, that's a good problem to have, right? But that's also something that the industry needs to get out of. Yeah. I'm not sure how
Exactly.
long it's gonna take, right? Because there are a lot of problems to get rid of that. Some of them technical, especially on EVM style blockchain. It's very difficult, and some of them more social, right? Because you need to change something to make the system scale, right? It cannot become bigger and stay the same at the same time, and you need the
Exactly.
community to be happy with those change. And as we saw in Bitcoin, for instance, they were not, right? And so Bitcoin never really increased its capacity. So there are both social and technical problems. It's probably going to take a while to get all of that sorted out.
Yeah, I think what we've seen in just analyzing projects, individual projects, some of which have been much more mature and doing, much more real world activities, and then some that are kind of setting up the pace of where adoption is moving right now in terms of financial adoption, both from a global stage as well as the banking systems, things of that nature. Europe has been one of those, though, that has been leading the way in terms of, I wouldn't say necessarily adoption, but definitely much more open-armed relationships with what's happening in cryptocurrency in general versus what we've seen here in the US, which is a lot of lack of clarity, a lot of moving around in the governmental agencies trying to figure out who's going to be managing and or potentially regulating what's happening in cryptocurrency in general and the blockchain. With Europe kind of leading the way, and now also South America, do you feel like Europe is going to have a leg up in terms of adoption for mainstream usage in the coming years when it comes to cryptocurrency and blockchain technology in general?
Um, I don't know. This is a bit difficult to say. Like first, because Europe is very heterogeneous, right? Like way more than the US.
Right.
To begin with, like people speak a variety of languages, right? So they cannot even speak to each other. So the situation can vary quite a bit in different country in Europe. But In general, I don't know, because on one end, as you mentioned, yeah, there are a lot of positive. On the other end, I feel like the culture of economics is not as strong in Europe as it is in the US, for instance.
Right.
Um,
Yep.
and I'd say also probably in South America for different reasons. Like in South America, people have to, like they had to understand the hard way what happened when they did the wrong stuff with currency, right? Because many countries
Hmm.
there made like very poor economic decisions that were, very damaging for the population. But while that's not the case in the US, people in the US tend to be much more savvy about economics on average than Europeans.
Yeah.
That's at least my
It's
impression. I lived there a few years. That's the impression I had.
Yeah, I think it's
So,
interesting to watch for sure. I mean, between the different countries who have you have a lot of adoption and to some extent a lot more at least consumer awareness on what's happening in Bitcoin. I mean, 5 years ago or back in 2017, the last bull run, you did not have near the amount of retail investors active in the marketplace that we have now. Obviously, there's a lot more, and because of that, we're seeing a lot of regulatory impositions that are being put on the market. So and now we've got ETFs, all kinds of things that are really developing and guiding the market. As a developer and working on the blockchain day in, day out, is there anything specific that you guys are looking at that says, hey, this could be a challenge in the coming years, from a technical aspect that if we don't address it soon?
um, it's very difficult as a generic question, right? Because different technology are gonna have different problems. But I mean, like the scaling problem is always coming back, and it's
Yeah.
kind of like the nature of those projects because at some point you need to order everything that's happening on the blockchain, right? Uh, because say I send a transaction where I send you some money, and then I send a transaction where I send someone else the same money, right? Like
Hmm.
what the first one of those two transactions is going to be correct, and the second one is going to have insufficient fund and not be able to go through. And the network as a whole needs to decide in what order those transactions happen. And now, intuitively, like people, they would expect that this is an easy problem, but this is actually not because transactions they don't spread over the network instantly, right? So if I send two transactions roughly at the same time at two different people on the network, well, depending on how those two transactions spread, part of the nodes are going to see one before the other, and part of the other node are going to see the reverse. And and because of that, you have this bottleneck, right, where you have this decision making for every single thing that happened on the network. You need to order it, and that creates a natural choke point. And people have been going through different ideas on how to remove that choke point, but it's not clear what path forward solve this. So
Hmm.
um, one path that people are exploring is parallelism. So what if you could make this computation, if you could spread it on several machines and do it in parallel,
Right.
because you can always buy more machine. It's not that expensive, and if your system is like so much successful that you need that, people are gonna have the resources to do that. So that's one way people explore. Another way is to create several pools that are more or less isolated from each other, and know the bottleneck exists just at the pool level. But then when you want to move from one pool to the other, it's more difficult, and you start to have liquidity issue. So this is what's happening with the Lightning Network, for example. Is an example of that
Right.
model, right? You create payment channel and you put liquidity into each, and now each payment channel act independent from other payment channels, so that scales much better. But now you have liquidity problem because the money that is in one payment channel cannot be in another payment channel, right?
Yeah.
And there is not always a route through the network that have the right liquidity and all of that. So you have liquidity issue there. Another path forward is zero knowledge technology, meaning instead of spreading all the information to everybody, you spread the proof that the information exists and that is verified by someone and that it is correct. right? So one example of that is ZK rollups on Ethereum, for instance, where instead of sending your transaction to the Ethereum network, you send them to a server, and that server is gonna order all the transaction it receives, and then it's gonna settle the end result of all the transaction on the Ethereum blockchain at some point, and provide the proof that all the intermediary steps are correct and verified, without providing all the intermediary steps. So that's another way forward.
Exactly, yeah, and I think just the consensus protocols that we've seen on Avalanche and just some of the companies that have really, and projects that have kind of evolved into utilizing the consensus protocol, I think that's going to be a big push in the right direction. Avalanche has had it. We've had John Wu on here a couple of times. That just the amount of ecosystem involvement that they've done has been pretty dynamic for sure in terms of the future where that protocol is going. So exciting stuff ahead. Definitely
that protocol is very cool. This is why we're using it as well.
Yeah, for sure. Definitely. Amaury, hey, listen, it was good having you on today. Thank you so much. We're going to be watching eCash and kind of where you guys are going as things develop out for you, and also as the ecosystem in general, I think, especially around payments and also wallets and some of the evolution of what we're going to see in the financial system. I think the architectures are definitely being built right now. eCash is going to be a big part of that. So great having you on the show today. Thanks for stopping in.
Thank you for having me.
Yes, absolutely. All right, you guys are checking us out over on the podcast right now. Make sure and tune in, of course, over here on the YouTube channel. It's the place where you'll catch these interviews, also some of our chart analysis, as well as some of our deep dives on different token projects from time to time. And the best way, again, is just jump over to YouTube, search Paul Barron Network. You'll find us over there, subscribe, hit the bell, and you'll get more notifications like that. If you're back over there on the podcast, give us a rating over there, because that's one of the ways we get feedback from you. But if you're here on YouTube, make sure and give us some comments below. It's the number one way we get audience recommendations on projects that you want to hear, maybe developers and or CEOs that are running projects that you'd like to get us to interview. That's the way to do it. If you want to hit me up on Twitter, it's just @PaulBarron. We'll catch you next time right here on TechPath.